So we're back here on the Duncan Duo Show. So there's a bill on Capitol Hill right now that can help self-employed people like real estate agents and gig workers, people driving for Uber or Lyft or, selling stuff on eBay, get mortgages. And so, there's always been a gap in mortgages for people that have income that's a little bit harder to document. Obviously, with the crash that we went through, things got a little bit tight. Now things have loosened, and so there are some push to institute some bills that would make it a little bit easier for those people in those situations to qualify for a mortgage. And then additional, millennials just don't stay at jobs as long. They job hop a little bit more. So some of the normal mortgage timelines that people want, millennials can't, if they change jobs every year, even though they're gainfully employed, sometimes a mortgage owner can look down upon that. So the bill is called the Self-Employed Mortgage Access Act, co-sponsored by Senators Mark Warner and Mike Rounds. It would expand lenders' permissible sources to verify incomes beyond the relatively narrow range specified in current federal quality mortgage regulations. As many as 42 million Americans are self-employed or in the gig economy. So it's kind of interesting. I mean, you think about it, people that wait tables, I know some waiters at some really prominent restaurants that make six figures, but they can't get a mortgage.
It's difficult, and I actually talked with someone earlier this week that was a server, or actually on the flip side, this is kind of a different one that's kind of bigger in our area, charter boat captains.
Yeah.
He gets paid per trip, so it's not like a set, what he's going to make every day, and then he gets tips on top of that. From the mortgage side, we can't count tip income at all unless it's documented and we can verify it and we can average it out, because there's no way to know if it's going to continue.
And some of it they won't necessarily document, and sometimes they have high write-offs, so it becomes a challenge. But this bill is meant to ease some of that, and again, I think anything can be vetted. Like if you do the right kind of research, you can determine, okay, what's the average for this, or what's the, to give some norms, but it's a struggle. I mean, there are people that work for me as real estate agents that do a great job helping people buy homes, and they sell a lot of real estate, but they can't buy any real estate because no one will give them a mortgage because they've only been doing it a year and a half, even though they've done an incredible job in a year and a half. So
I mean, everything, the world that we live in was built, 100 years ago in some cases, 80 years ago. The 40-hour work week. Do you know where the 40-hour work week came from? Henry Ford.
Yeah.
Because prior to that, it was 6-day work weeks, and they finally they did the math to make it a 40-hour work week, an 8-hour work day, so they can fit 3 shifts into a work day.
Right.
Prior to that,
but we've stuck with that forever.
And we're just so lending's the same thing. It's like W-2. What do they make? It's very square.
And we're in a much more entrepreneurial society than we've ever been, with technology, with social media, with the internet. You see some of the speakers. We saw Gary Vee, live a couple of weeks ago. When you hear all these guys speak, they're so encouraging for people to go do this, and it's great. But then when people do it, they're shackled in some ways, Right. So again, I don't want to go back to being able to, rubber stamp at anyone with a mortgage. But I think there's more that can be done in this space. I don't know if this bill's the complete answer, but I know that they're headed in the right direction if they can find a way to put some protocol in place, some extra verification, or maybe requiring a little bit higher credit score. There's got to be some risk tolerance math that they can do to figure out what could make sense.
There are some programs that are starting to come back as well. We offer one where it's essentially a bank statement program.
Sure.
Mainly geared for that self-employed borrower, where they may write off everything and you don't see anything, but you can see that they're consistently putting money in the bank, and
Sure.
the business is accumulating money. The tough part right now is, and kind of the drawback, that some people don't want to go that route because those programs generally come with higher interest rates.
Right, and this is attempting to get them to become QMs,
Right.
qualified mortgages, where Fannie and Freddie would sell them and they wouldn't have the attached higher rates and fees.
Right.
And interestingly enough, it's the government that owns Fannie and Freddie, so they have to create the bill for them to allow their entities to buy the loans.
Right.
And boy, they sure have made a lot of money. I saw some financial reports recently about how well Fannie and Freddie are doing, and I think they're probably okay taking on a little risk right now. They've done very, very, very well.
Everyone in this room helped them bail them out. Right?
Exactly. Yes, we did. So we're guilty.